Alrighty, this is Chris from MarketSwingTrader.com. Today we're going to go over beta and what does beta mean, how you can use it in your trading, how you can use it to manage your portfolio. Now, beta is the measurement of volatility a security instrument or a portfolio compares to the market. And when I mean portfolio, because you can beta weight your current positions that you are in. And I do that when I'm have multiple option trades on. So let's say beta. Let's say a stock of a beta has 1.3. And I will show you examples here in a minute. What that means, if a stock has a beta of 1.3, it is 30% more volatile than the whole market. So a low beta stocks are weaker. So if they're below 1, so let's say we take the SPY, that has a beta weight of 1. So if a stock has a beta weight of, let's say, 0.5, that's a low beta stock, and it's going to be weaker than the market. Now, when you have low beta stocks, that is good for positive theta positions because you're collecting premium. Because if the market moves up, let's say we have a beta weight of 0.5. That's half of the beta of, let's say, the SPY. And let's say the SPY moves up 2%. Well, a stock that has a beta weight of 0.5 means that it's going to move up 1%. So if the SPY moves up 2%, then a stock that has a beta weight of 0.5 will only move 1%. Now, a stock that has beta weight of 1, which that means it's going to move in tangent with the stock market. So it's going to move with the stock market. Now, I'm going to show you some examples. So let's take the SPY. First, when we are in Thinkorswim, we're going to click on the Trade tab, and then you're just going to type in SPY and go over here to the underline, click on that blue arrow, and then as you can see right here we have all the information here, but you also have another one underneath there right here. When you click on that, that gives you more detailed information. Okay, it gives you like the yield, the PE, like the dividend date, the 52-week high and low, and also right here we have beta. So the SPY has a beta of 1. So now let's look at another stock. Let's look at Caterpillar. So Caterpillar, if we look right in here, we have a beta of 1.1. What that means is that it's going to be 10% more volatile than the market. And realistically, that still is a pretty low beta. When I am scanning for trades, I like to look for trades that if I'm going to be doing positive theta positions, collecting premium, I kind of like looking for trades that are below 1.2. If I have a stock that has a real high beta, let's look at Jim Walters. Because I swing trade Jim Walters, I don't trade the options. But if we look right here, the beta is 1.94. That's almost twice as much as the market. So that means if the market moves up, let's say 5%, then Jim Walters is going to move up 10%. However, it also means if the market goes down 5%, then Jim Walters will more than likely go down 10%. Now this is not the Holy Grail, and it's not indication that it will exactly do that. This just gives you a good idea so you can look to see what stocks that you are trading, how volatile they can be. Now you can use this for options trading. You can also use this for regular stock trading, because low beta stocks are going to be weaker than the market, and they do have their positions in a portfolio. Also, high beta stocks, they are more volatile. They have high risk and high reward. So when you are trading stocks that have high beta, it's a must to have proper money management. Proper money management is a must, because it is going to be more volatile. Now, if we look at, let's say, another stock, let's look at Raytheon. We have a beta of 0.75. That's a pretty low beta. I like that. So you could put on a type of position where you can collect some premium if you're going to do an options trade. So this means that if the market starts moving up, well, Raytheon is going to move up as well, but it's not going to move as much as the market, or even greater than the market, because it has a low beta. If we look at another stock, Newmont Mining, that has a beta of 0.32. Now that is a pretty low beta. That is a really good trade. I would look at that to see, okay, what kind of option trade can I put on that will collect me some premium. Now, if you have the type of trading plan where you are swing trading stocks and you want to get into a stock that's going to move, well, then you need to look for high beta stocks. If you are conservative with your trading, you want to look at stocks that trade in tangent with the market, with a beta of around 1 or even lower, because it has lower volatility than the market. So that is beta. And again, beta is a measurement of volatility a security instrument or portfolio compares to the whole market. So I hope you understand beta and how you can use it in your portfolio. Thank you.